he has decided to hold rates steady for now. But Raghuram Rajan has put the ball squarely in the government's court. That's the clear message that came in from the RBI governor, who kept interest rates unchanged in the bi-monthly monetary policy review. But in a clear move aimed at nudging banks which failed to pass on the benefits of the rate cut 3 weeks ago, the RBI did cut the statutory liquidity ratio by half a percentage point.
The governor unambiguously indicated that further monetary easing will be data-driven and a lot will hinge on the quality of fiscal consolidation. So the next move on rates will be after the budget, and that too only if Finance Minister Jaitley delivers on the fisc. RBI's calculated rate for the budget and the data that will drive the monetary policy is our top story on Business Tonight.
No party from birthday boy Raghuram Rajan. The 52-year-old RBI governor today left interest rates unchanged, making it clear that he would rather wait until Arun Jaitley's first full-year budget to take the next step. The only surprise came in the form of a 50 basis points cut in statutory liquidity ratio, prodding banks to lend more.
What we have said is we're waiting for data. We have a budget coming up. That's a significant change in the fiscal space. It is going to be an important change. We've got new GDP numbers coming on February 9th, which will reflect a whole new view of what's happening in the economy. We've got inflation numbers coming. I mean, this is all data that we need to watch for.
Rajan says the banks need to do a lot more when it comes to transmission of rates.
In general, base rates haven't changed. Of course, when you talk to banks, they're very happy that we cut rates. At some point, my guess is transmission has to take place.
Continuing with its efforts to deepen the debt market, the RBI today allowed foreign portfolio investors to reinvest their coupon in government securities without raising the overall cap, a move that could rake in an additional $2.5 billion into the GSEC market.
Given the interest in India today, if we just expand the FPI limit in government securities by some, let's say $5 or $10 billion, it will be taken up in a couple of weeks. And we'll still get people wanting us to open more. We thought a more streamlined way of doing it would be to allow reinvestment of interest.
RBI may have kept policy rates unchanged this time, but what will decide the timing of the next policy action will be the quality of fiscal consolidation path that will be laid out by the government in the budget and the speed at which disinflationary process takes shape. But the market has already factored in another round of rate cut before the end of this financial year. Kumar, ET Now, Mumbai.
All right, let's take it across then to our very special guests who join us both right here on Business Tonight for more perspective on the decision to hold on to rates and the monetary policy stance up until the union budget. We've got Arundhati Bhattacharya, the chair of SBI, and Adi Godrej, the chair of Godrej Industries, who join us with more perspective. Ms. Bhattacharya, if I may begin with you, this is largely on expected lines?
Yes, I think so. I don't think any of us were expecting any major changes. Even the SLR, I don't think I was really expecting it. But basically on expected lines.
All right, this is on expected lines, but Mr. Godrej, what about you? Are you disappointed that Governor Rajan has not cut rates in this review? 3 weeks ago he did that, but he has chosen not to this time around?
Well, I was personally hoping that they would cut the rate, but if they do so just after the budget, that should be fine, because they have recently cut the rate.
Mr. Godrej, RBI also says it will move on rates only after it's convinced on the government's fiscal consolidation path. How do you read that statement?
Yes, because the fiscal roadmap will indicate what effect that fiscal roadmap will have on inflation. So it's good to wait. Fortunately, all the indications are that the fiscal roadmap will be excellent, because the government will be able to keep the fiscal deficit down very considerably, because of the global commodity prices coming down, subsidies will be quite low. Also, government's disinvestment plans are likely to go off well, because the stock market is doing well. We saw a very good disinvestment in Coal India on Friday. So I expect things should fall in line, and there should be fiscal control on inflation, which will lead to further rate reductions by the RBI.
Ms. Bhattacharya, an SLR cut of 0.5%, you said you weren't expecting this. How are you viewing this? What's the signal here really from the central bank?
It should aid liquidity. For us, half basis point cut means around 7,000 crores. But having said that, at this point of time, there is no dearth of liquidity. There is very little credit demand. But probably, what this does is that this gives an indication to the government that the Reserve Bank will support investments in the country, and that when these projects come in and are ready to get off the ground, there will be enough liquidity in the banking system to support these projects. So basically, I think this is more of a signal rather than anything that will change matters right now. As you know, most of us have excess SLR, and we have been given a roadmap up to April of 2019, if I remember correctly, to get this down to where the RBI wants it. But obviously, it gives us flexibility to switch from GSECs into loan assets as and when the demand picks up.
All right, almost nudging banks to go ahead and lend more. But Mr. Godrej, if I may ask you, how much rate cut are you expecting in all of 2015? Do you expect 100 basis points or even more?
Yeah, I think 1% is a minimum that we should expect during this calendar year. And depending on the inflationary situation, depending on the effect of the budget, I think it could be anywhere up to 2%.
All right, up to 2%. You're perhaps being ambitious is what a lot of people on Mint Street will say. But ma'am, if I may come back to you on the point that you were making, that there is surplus liquidity in the system, not enough credit offtake, there's big asset liability mismatch. How will really things change from here on? And when do you see this change kick in?
Things will change. That much is a fact. How again is known to us. We need to see the investment cycle take off. We hope that the coal auctions, the telecom auctions, that these will be triggers that will start off the investment activity in the country. But when it will all come together is still something that we can only guess at. Again, as you know, and I've been keeping on saying this, that projects take a lot of time in the time to think about them, to create a detailed project report, to get the approvals, the other requirements like land, etc., and then to tie up the equity and the debt component. It all takes time. Now, how soon can it get going? Well, 2 quarters maybe, and if not 2 quarters, how much further after that? 4 quarters. So between 2 to 4 quarters is what I would say it would take to get back to the growth cycle that we were seeing sometime in 2008 and 9.
Fair enough. Mr. Godrej, let's talk about the investment cycle. In your view, will rate cuts revive investment cycle at all? And if not, then what will? Because, a slew of measures taken by the government so far have done very little to revive the investment sentiment. What, in your view, will?
Well, rate cut alone cannot help increase in investment. And of course, it is one of the factors that will help increase investment. The other advantage of a rate cut is that the demand for items which are generally purchased through financing like residential real estate, autos, consumer durables, demand could pick up very considerably. But it's not the only way to increase investment and growth. There are other things that are required to be done, which I'm hoping we will see in the budget. But by and large, a rate cut will be positive for growth.
A big question is, when will the investment cycle turn? Let's find out from the banker as well. Ms. Bhattacharya, there's usually a delay between credit offtake and inquiries that you get from corporates. Have you seen a significant pickup in inquiries? Do you see corporate India getting back to investment mode in terms of at least conceiving projects right now? Inquiries
are definitely back. But as I said, and as you yourself said, so there is a time lag between inquiries and actual credit disbursement. But definitely we are seeing many more people conceiving projects, taking up stuff that they had sort of shelved for the time being. So inquiries are definitely back.
Fair point indeed. One last question I'll put forward to Mr. Godrej here. There is an increasing debate in New Delhi that's gathering space on the need for fiscal consolidation or fiscal expansion actually to boost growth. But of course, some members of India Inc. and people in the government do believe that this could have a huge dent on our credibility. Which side of this debate are you on? Should the government allow some fiscal slippage to boost growth, or should it stick to the fiscal deficit to the last decimal point?
There's no need to do it. The government could increase spending, which they should. Government should incentivize manufacturing, which they should, and yet have a tight fiscal control, because subsidies will come down very considerably next year because of global commodity prices being low. Indian agricultural prices are low, and disinvestment could make up for the rest. So the government is in an excellent position to not only encourage growth, but also to contain the fiscal deficit. We shouldn't get into an inflationary cycle again.
All right, Mr. Godrej, Ms. Bhattacharya, thank you so much for joining in with that perspective right here on Business Night. That's the view from the banker and the corporate as well. Thanks for joining in with that perspective.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.